You know, when we picture America's baby boomer generation, we tend to think they hit the economic jackpot, right? They bought homes for cheap, they rode a massive stock market boom, and they had stable careers. But what if that whole picture is about to get flipped on its head? According to one very famous financial author, the golden years for a lot of boomers could be headed for a really, really rough ending. Okay, let's get into this. Yeah, that is a direct quote from Robert Kiyosaki, the guy who wrote Rich Dad Poor Dad. It's a shocking thing to say, and it flies in the face of everything we think we know. He's not just predicting, a little market dip, he's forecasting a full-blown social crisis. So what on earth is he talking about? To really understand where he's coming from, we need to first break down who exactly he's talking about and why he's so convinced this specific generation is standing on the edge of a financial cliff. So what makes this wording so powerful is that Kiyosaki himself is a boomer. This isn't some outsider taking shots. This is a warning coming from inside the house. He's basically saying that despite how successful they all seem, their entire financial foundation is way, way shakier than anyone wants to admit. Kiyosaki points his finger at one main villain in this whole story: inflation. His claim is pretty simple. Rising prices are going to eat away at the value of their retirement savings and their Social Security checks so much that for many of them, it'll be like having nothing left at all. So if inflation is the weapon, who does Kiyosaki think is pulling the trigger? Well, in his world, the blame lands squarely on the shoulders of one incredibly powerful institution, the U.S. Federal Reserve. To get his argument, we've got to talk about something called fiat currency, or as he bluntly calls it, fake money. We're talking about money like the US dollar that isn't backed by a real physical thing like gold. Its value basically comes from the fact that we all trust the government that issues it. And Kiyosaki says this system gives the government a license to just print money whenever it wants. And this right here is the absolute core of his point. When new money gets created, it doesn't hit everyone the same way. If you own assets, houses, stocks, you see their prices go up, you feel richer. But if you're a saver or you're on a fixed income, you just see the price of eggs and chicken go through the roof. Your money buys less and less, and your actual purchasing power gets completely wiped out. And let me tell you, Kiyosaki does not mince words here. He throws out some pretty heavy accusations, calling the Fed a criminal organization. He says its policies are Marxist because it's so centralized. He even connects its creation way back in 1913 to when the income tax started. And more recently, he's been warning that interest rate cuts in late 2025 are going to kick off a big print that will send us straight into hyperinflation. Now look, it's pretty easy to just hear all that and dismiss it as one guy's super extreme view. But the source material we're looking at points out that his worries, well, they don't exist in a vacuum. There are other economic signs that have a lot of people feeling pretty anxious. Yeah, there are several little data points that are popping up and causing some real concern among economists. And they all kind of paint a picture of an economy that might be a bit fragile. First, there's the job market. The U.S. didn't gain jobs in February 2026. It actually lost 92,000 of them. That's a big and pretty worrying reversal. And right along with those job losses, the overall unemployment rate has started to tick up, which could be another signal of weakness in the economy. And this brings us right back to the boomers. The Social Security Administration's own report says that by 2035, the system will only be able to pay out about 75 cents on the dollar, unless Congress does something. That is a ticking time bomb for anyone who is counting on that money. And it's not just the contrarian voices saying this stuff. Even a mainstream Nobel Prize-winning economist like Paul Krugman has admitted that the economy was looking stagflation-ish. That's that nasty combo of high inflation and zero growth. So it seems the underlying worries are shared by more people than you'd think. So, with such a gloomy forecast, what does Kiyosaki actually suggest people do about it? Well, this is where we get into his personal investment strategy for surviving a potential collapse. Now, before we just brush off his advice, the article points out he's got a track record of making some pretty bold calls that turned out to be right. For example, his 2023 predictions for gold and silver, well, the actual peak prices blew way past what he'd predicted. It kind of suggests that when he makes a call, it might be worth at least paying attention. So his strategy really boils down to three key things. Three types of assets that he believes can survive the storm of inflation and a dollar that's losing its value. Let's take a look at each one. First up, gold. No surprises there, it's the classic safe haven asset. The key thing is you can't just print more of it, which makes it a really powerful defense against inflation. And as Kiyosaki himself puts it,
His investment in gold isn't about liking the shiny metal, it's a direct vote of no confidence in the central bank. Next up is cryptocurrency, especially things like Bitcoin and Ethereum. And the logic here is actually very similar to gold. These are decentralized assets that the Fed and the Treasury just can't create out of thin air. His theory is pretty straightforward. As the dollar buys less and less, the value of something finite, like Bitcoin, should go up.
And finally, we have the one he's maybe most famous for, real estate. Property values and rent payments, they tend to rise right along with inflation. But here's the key. Kiyosaki stresses real estate not just because the price might go up, but because it can generate steady cash flow. It can give you an income stream even when other markets are going haywire.
Okay, so after laying out this dire prediction, pointing at the alleged bad guy, and giving us a potential survival guide, what's the big idea here? What should we really be taking away from all of this?
The entire argument that's presented here really boils down to one fundamental conflict. It's a tug of war. On one side, you have our entire financial system built on money that can be created out of nothing. And on the other side, you have real, tangible, finite assets that can't. The whole debate is about which side of that line you want to be on when things get stressful. And all of that leaves us with one final and pretty huge question. It's really the puzzle at the very heart of this whole warning. In an economy where money can just be printed, what is real wealth? It's a question every single one of us might have to find an answer to, maybe sooner than we think.